Good morning, traders, and welcome. Happy Monday. This is the Bookmap channel. My name is Charles. I run a community called Piratetraders. We're focused on the ES, the NQ, and how it moves through the two-way auction process. Okay? We basically look at the market as a competition between buyers and sellers and how they're interacting with each other, who is taking control, and how far they can push the market. So the way we do that is we look at, several different pieces of software to give us indications of what we could understand. First is this one you see over here on the left. That is the market profile software. It's from a company called Window Trader, but any market profile software is fine. And basically what this does is this takes the same information that you have on a candlestick, right? Which is essentially, where did the market go? How much time did it spend there? And how much volume did it trade? That's the information that's available on a candlestick. It takes that same information and it shows it to you in a three-dimensional form. So if you look at the screen over here on the left, you'll see that we're creating these bell-shaped curves, these little areas right here. Those are really important for understanding the behaviors of the market. That is basically the areas where the market is spending the most time and bringing in the most volume. And any area where the market spends a lot of time and brings in a lot of volume is an area where a lot of business is being had. What does that mean? It means that's an area where the buyers and the sellers are competing with one another to try to win, right? They're playing tug of war. One side is trying to outpower the other. And that is pretty much how every move happens. The market moves to a new location. They play tug of war. They try to fight to see, is there enough buyers to push it up or enough sellers to keep it going down? And then it makes its next move. So by looking at the market through market profile software, we're able to see where that two-sided trade takes place. Okay? On the right side of the screen over here, this is the Bookmap software. Okay, so what this does is this lets me look at the liquidity in the market. This little white line that you see right here is very, very important. On the right side of that, this shows the liquidity that is currently in the order books right here. And then this over here on the left is the liquidity that was there at that particular time. So if you look at the colors here in the background, where it's darker, that's where there is less liquidity, meaning less orders sitting there waiting to fill. And where there is, more color, the more and more towards the direction of red. So it goes from, black to blue to white to yellow to red. The more and more towards the color red it gets, the greater the amount of liquidity was sitting there. So by being able to see where are the areas that the market spends the most time and brings in the most volume, meaning the most trades actually exchange hands, and comparing that to what's happening in the liquidity in the orders that are waiting to fill, we can see opportunities. Okay, we have support. We have buyers stepping in. Okay, we have liquidity above. We have a target for them to move to. Boom. We have an opportunity. And then lastly, we look at the internals, which are in the background here. I will pop these up from time to time. In the middle, up here, top middle, we have the breadth, the VOLD. Then we have on the right the AD-SPD, or the advancers versus decliners for the S&P 500. Then we have the tick chart for the NASDAQ and for the NYSE on the right, and the NASDAQ in the middle. And then over here on the left side of the screen, I have the SPX and the NDX. And I have those up in 15-minute candles because I like to look at the 20 moving average, the simple moving average on the 15-minute candles for just the regular trading hours. And that's a good support resistance level. Okay, so those are the tools, right? That's everything I look at. I got the market internals. These give me a look under the hood at what's happening with the stocks, right, at the actual market level. I've got the Bookmap and the market profile showing me the orders in the ES and the NQ and where they trade. And all of this information kind of gives me a feel for what the market is doing at any particular time. If I feel like I understand what the market is doing, I will likely know what comes next. That's just experience, right? I've traded the market so much. I know if I'm seeing support and we have liquidity above or whatever the case may be, I've got an opportunity to get long. I've got an opportunity to take profits. And that's essentially what trading is. So that's what I talk about all day, every day as I stream. All right, well, let's start because it's Monday morning. It's the beginning of a new week. Let's start with some perspective. I like to use Jim Dalton's top-down approach to kind of zoom out. We get so focused on what's happening intraday, every little move up and down, every point, that we forget that there is actually an auction process happening on a much longer time frame as well, right? There is debate happening, sure, right now at this moment, at this particular level where we're playing tug of war right now and we want to know who wins. But there is also a tug of war happening on a bigger basis where buyers and sellers are competing. So we're going to start zoomed all the way out on the monthly chart. That basically takes all the information from an entire month and smushes it into a single candle. And that helps us to get a really zoomed out perspective on the market. There's not going to be anything, that you would get day trade wise out of looking at a monthly chart, but it just gives you some perspective as to what is happening. So what jumps out at me right away when I look at the monthly chart? Well, we had several years of excess to the upside. Okay. We are clearly now balancing that off. We did not balance it off with price, right? We didn't pull price all the way back down to test these previous highs over here. So that tells us we're balancing it off with time. Now, this is on the monthly basis. So when you say you're balancing with time on the monthly basis, you're talking about over a period of years. You are balancing. Okay? So that's one perspective I'm going to carry forward. The market is in balance. You're about to hear that word a lot. So next, let's jump into the weekly basis. Okay? So now each candle represents 1 week's worth of information. What do we see? Well, zoomed way out, the same thing we saw before. It's balance. On the weekly basis, we are in one big, giant balance area. Right here. The market pushed from one end of balance to the other. It tried to break above. It could not break out. It came back in. Once it pulled back in, came in, back test, and boom, opposite end, right? Tried to go back up, couldn't make it. Sideways, 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 all the way back up. Oh, test it, and now we're reversed back in. So all of this is tug of war. All of this is the market. Each one of these weeks, the market is playing tug of war, but there is also tug of war happening over the years, right? Or over the months in this case. So now let's zoom into the daily. And let's take a look here. Well, when we look at the daily chart, what do we see? We had a lot of excess to the downside this time. Big move to the downside. Turned around and started heading back. Did not come back and completely backfill it with price. So now we're doing it with time. This looks a lot like the monthly chart inversed, the other way around. So if I'm looking at the daily chart right now, I'm thinking the fact that we could not move all the way up towards the 44.60 level means we need to go sideways down here. Okay. We got a pullback. So the next question is this pullback over? When is the momentum down or the beginning of the balance up, however you want to look at it, the support that's going to reverse the market back up? Where is that? That is the main focus this morning. Okay. So now let me zoom in and take a look at the market on the market profile chart, where I'm seeing where the trade has been taking intraday. And what a mess of a market. So we had that momentum up, rolled the market over, broke lower, came back up, back tested that, re-entered a previous balance area. And now, since Friday, we have been doing nothing but dancing right on top of this balance area low, or sorry, balance area high right here at 43.68. So what does that mean? It means this is the current tug of war level right here. The break of this tug of war will give us a sign of who's winning on the daily tug of war, right? Which will give us a sign of who's winning on the weekly tug of war, which will give us a sign of who's winning on the monthly tug of war, right? You see how this builds, how this information builds one on top of the other, one on top of the other to give you insights. So the way I'm going to approach my trading this morning is basically like this. I'm going to assume that the market is just trying to decide how it wants to interact with this area right here, around 43.68. I have this marked as a previous balance area high. The reason that this area is important is because if this breaks and the market heads lower, it is likely to head all the way down to the balance area low. It is likely to head all the way down to around 42.75. Okay? So this area acting as support and holding the market up is very important because a break could lead to a big move. In that same regard, if this area holds as support, right? If this area can hold as support and the market continues higher, well, then we've back tested and we're ready to move higher. So let's zoom back out at that daily chart once again and see if that's our next move. Where is that next move up probably going? To test this area up here again, right? The 44.20s. So either way, whether the market breaks lower or breaks higher, it's got quite a move to make once it breaks away from this level. Once it gets away from this balance area high around 43.68. So intraday, this morning when the market opens, I'm going to assume, just like the overnight did, we are going to play tug of war. We're going to try to push higher, come back down. We're going to try to push lower and come back up, and so on and so forth. We call that a chop zone. So I suspect that for the first half an hour at least, if not maybe even the first few hours of the day, we're likely to chop inside this zone. We've got resistance at 43.84 from the base of the single prints down on Friday. And then we've got all this support down here from Friday. The market spent a lot of time and brought in a lot of volume to create support. That was confirmed by being held over the weekend. So we have got an excellent location for tug of war. While they're chopping it up for the first hour or two today, I'm not going to be looking for trades because I'm just going to say, listen, guys, I don't know which way it's going to break. I don't know what's going to happen next. So you guys play tug of war, you fight, you go up 2 points and down 3 points and up 5 points and down 4 points, and you just keep drive each other mad. But when we either get above the base of the single prints at 43.84, and I see new buyers up there, or we get below this node right here around Friday's lows, we'll call it 43.50. If we get below there and find resistance, then I'll know it's time to party, right? Then I'll know it's time to look for trades. Because if it's going to go higher, first we'll get support here, and then it will go a lot higher. And if it's going to go lower, first we'll get resistance here, and then it'll go a lot lower. But it will be very choppy in between those two. And so that's the market understanding that I come into the market with this morning. All right, now the NQ is a little bit messier in terms of balance areas and exactness. So I wouldn't be quite as bearish as I would on the ES, right? Because the ES is right on a previous balance area high, where if it breaks lower, it would break to the balance area low. The NQ is above it right now. So you guys haven't even pulled back to back test that bad boy. So even if the market broke lower, I'm not sure there'd be a large move to the downside. you may just pull back test this support and go nowhere. But I would be just as bullish to the upside, that if they get above the overnight high and they find support, we're heading back up to test the 15,440s. Okay. So same thing, chop zone with the overnight range. The overnight high is the area that we're looking to get above and stay above. If they can do that, the move is to head up higher towards the 15,440s. If they get below the overnight low, I would look at it very differently. It would be a monitor for continuation situation where first I would say, can they find resistance right in here around, 15,100? If so, can they test Friday's low at 15,060? If so, do they get new selling there? Do they turn that into resistance? If so, can they test, we'll just call it 1,500, right? If so, do we get a bounce there or not? Now, if all those things happen, if we push below this node and we get resistance, we push below the overnight low, we get resistance, we push back into the previous balance, and we continue to trade down there, then I'd get ready to party. Then I'd get ready for that big move to the downside below 1,500. Okay. So that's the ES and the NQ and the two-way auction process for this morning. Any questions? Hit me in the chat. Good morning to Keith. Bust a move in the house. Michael, good morning to you. ONKT for your Sunday morning news. Welcome to you. Keith, when you get a chance, can you explain how your tick chart, how you use your tick chart? What is the data? How do you read it? What does it mean? How do you pay for it? Thanks. Yeah, no problem. So the market internals, those four from the background there, the breadth, the advancers versus decliners, and the ticks, they should be free with any charting software you have. Sometimes they make you pay extra for it, but you shouldn't. Most brokerages would give it to you for free. And basically it's just a ticker. So, like a stock ticker, VOLD. You can do for the advancers versus decliners, either ADD, which is the full market, all the stocks being traded, or the ADSPD, which is just the stocks in the S&P 500. Then for the ticks, TICK, that's the NYSE's ticks. And TICK-Q is the NASDAQ's ticks. So the symbols might be slightly different depending on what, brokerage you use and what data you use. But it should be something in this range. Just Google it and you'll figure it out. So what is the tick chart and how do I use it? Well, the tick is basically measuring the buyers and the sellers at the actual level of the NYSE itself. Okay. So at the exchange level, are they buying and selling actual shares of the stocks? And the way to read it is as purely a momentum indicator. So you don't look at it like candlesticks. That's, candlesticks, they move in a certain direction to tell you they have momentum. That's not necessarily as much the case with the ticks. It's really where they interact to that zero line that really matters. So you could think of the zero line as being like neutral. The zero line is where the buyers and sellers are the same and no one's winning. And from that point, from the zero line, whichever way the ticks go, that's a piece of information you can use. That can tell you who's trying to take control. So let's say, for example, the market is the ticks are moving higher and the price of the market is moving higher, right? And then the ticks get to the zero line and the market is right at, say, a resistance level, right? And then boom, those ticks, they try to get above and they get smacked right back down below that zero line again. That's the market telling you, wait a minute, they're selling the underlying shares. They're selling resistance. So that might be a sign that the resistance is going to come in the futures, right? So it's not a leading indicator. It is a lagging indicator, but it's as close to real time as you can get about what momentum is happening in the market. So there's two things I'm paying attention to. The first is that zero line and where we are in relation to it. Are we above it or are we below it, right? And then what direction are the candles moving? So if we start below and we move up through it and we keep going up, well, that's very bullish. There's a lot of momentum. We got back to the zero line and the buyers took control and they're continuing to bring in more momentum and more momentum. That's really bullish, right? But if they come back up to the zero line and they poke above and then they get smacked back down, well, that's less bullish. That's more neutral. We're probably going to chop. Same thing the other direction. So it's just kind of a way to understand momentum. Now, where you will kill yourself as a trader is if you try to use the internals to enter trades and to make decisions about trades. If you're trying to be like, I'm just going to stare at the tick chart and decide whether I want to get long or short based on that, you'll go mad. They really only work as a way to sort of confirm an understanding that you have come to based on price action. You always want to start with price action. What is actually happening on the chart? That's the important information. So how would I use ticks this morning? Well, the market's going to open. We're going to head up to test that overnight high, which is also the base of the single prints down from Friday. So we would suspect there is both a magnet to get price there and resistance once it does. So there's a pretty high probability we're going to test that overnight high. Okay. So once the market pushed up there, then I'm clicking on the ticks. Then boop, I lower this down. I look at the ticks. Where are they right now at this moment when we're right on that resistance? And I'm looking for the information right then and there. What's going on? Okay, where are the ticks right now? If I sit and watch the ticks as the market moves up there, they might get me bullish, right? Because they're going above the zero line and they're pushing up and I'm feeling good. But then once it gets to the resistance, if they get smacked back down, that's smackdown. That move back to the zero line, that's the important move, right? So that's what I want to watch. So I pretty much ignore the market internals until something in price action is asking me to look for a confirmation. Are we getting resistance? Are we getting support? Are we breaking out? Are we failing and pulling back in? Let me look at the internals for a confirmation. Four minutes to market open. Good morning to Nap. Jay, thank God it's Monday. The casino is open. Boo, 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 boo. Not yet. 3 minutes. Keith says, everyone give Charles a thumbs up. I concur, Keith. Let's get some thumbs up. We got 94 people hanging out, but only 22 thumbs. Only 22 thumbs for Charles. Good morning, Mike. Nor Auto Trading in the house. Caution is here. Tom Gunn, good to see you. What is the best broker? Yeah, no, I don't answer that. It's all a joke. David G, good morning to you. Any other questions? Let me know. 2 minutes to market open. So once again, for those of you playing the home game that are just arriving now, I am seeing the overnight range as a chop zone at market open. So my assumption is for the first hour of the day, we're going to grind around between 43.50 and 43.85. Okay? We're just going to go up and down and all over the place, and it's going to drive you mad. We've got some good, strong support right here around 43.66 to 43.71, and some good, strong support down here between like 43.50 and 43.58. So the likelihood that the market heads lower is a slightly less possibility. It's a slightly lower probability than that the market will go higher. But until we get above 43.84 and find support, we just don't know, because they could easily poke above and then come right back down. And we could easily spend the whole day grinding around in here. So we don't think they're going lower, not right away. There's a lot of support, and there's going to have to be some sideways chop first. If they do push down there, if they push down below 43.50 and they're finding resistance, well, hell yeah, we'll get bearish. But until then, we just assume sideways chop, and we watch that overnight high for support. And pretty much the same thing with the NQ. A little less bearish at the lows because they have not tested their balance area high yet. So resistance below 15,100 would look to test 15,060 and then look for new sellers there. Only if I saw new sellers there would I get bearish for further downside continuation. And the same thing above 15,188. Support above there would be bullish for continuation higher, but anything else would just lead to more sideways trade inside the overnight range. Market is open. Let the chop begin. Looking for some chop fest, chop it up, baby. A little chop fest, chop it up now. Good morning to Pavel, Percy, PSC, and Shawshank. Welcome. Shawshank says it was a good chop song. Thank you. Chopping broccoli. All right, so here's the test of the overnight high. So remember, we had a magnet to pull it there because it was the overnight high, but now there's resistance there because it was the base of the C singles down. So we're looking to get at least one more letter above the A here to make a good high. And then C, does it pull back down into the overnight range, or can they stay up above the overnight high? Let's see what happens. Right now, we consider that high weak. And when we look at the book map, there was an iceberg at that high. So that just confirms there's going to be some tug of war here, some chop on the overnight high. A little incoming bot chop. Okay, so they just made a good high. So now the question becomes, can we stay up here? Can we stay above 43.83? Or do we pull back down through the opening price? Staying up here and turning this into support would be bullish for continuation higher. Failing and pulling back through the opening price would lead to more chop. What's it going to be, market? What's it going to be? Michael says, how much time do I spend in my room? Are you talking about the brigade? So yeah, I've got a membership group called the Piratetraders Brigade. Link above. Not you can't touch it on the screen, but you could type it in. Yeah, if you want to join, it's $10 a month. I do the first hour every day, no matter what. I do the first hour live, and then the rest of the day, I just take it from there. If I'm done trading and I don't want to keep going, I just stop. If I'm kind of in and out, like trading, kind of keeping an eye on it, I'll jump in and mention things throughout the day. But generally, it's the first hour for sure, and then I take it from there. Chino, good morning to you. Tom says, everybody was kung fu fighting. Their moves were fast as lightning. I would say that sounds a little bit frightening. It was a little bit frightening. Them cats was fast as lightning. The side gig guru. In my best Terminator voice. Chop it now. Bring me the chopper. It's going down. It's going down again. Get to the chopper. Michael, good morning to you. Okay, so this is one of those moments. We're above the overnight high. Okay, we're starting to spend some time. We're starting to bring in some volume. So now I'm looking over at the ticks to see they're above the zero line. What's going to happen when they test it? Does it bounce or does it push through? I'm also watching those icebergs on the Bookmap. I'm recognizing that we are still in one of these bot shenanigan zones, playing tug of war here. So I do assume we're going to come back down and test this iceberg at 43.84 at least one more time to test that overnight high for support. And we'll see if it can hold. Bot shenanigans. Oh, yeah. Yep, iceberg's already stepping in. Bot shenanigans. Bust a Move says, Single Prince said, I'll be back. Wolfer says, SEC approved a BTC iShares spot ETF. Are you serious? Wait. Saying it so. That would mean Bitcoin should bounce. Oh, yeah. There you go. From 26,800 to 28,400. Pew. Yeah, so you talk about balance and excess, man. BTC is in quite a balance area. I would say if they can hold, they'll come back down, they'll test 2,800. If they can hold that, I would get bullish at 2,800 for a move up towards, the 32s to test the resistance up here. But first, I need to see that hold because you are right freaking smack dab in the middle of balance. Truly. On the Bitcoin. All right, here we go. Can they hold the overnight high? If they hold it, it's bullish for continuation higher. If it fails, more chop. Can they hold it? Oh, that's a big no as we pass back through the opening price. The chop continues. The chop continues. So if they were going to go higher this morning, what they should have done is exactly what they did. Push up above that overnight high. Do exactly what they did. Come back down and test it for support. But instead, the tick should have bounced at the zero line and gone back up. And the price should not have come back through the opening price. So that's just a sign we need more two-sided trade. There was not enough buyers last time. So we dip down, we put the market on sale. We get some discount shoppers that step in, and then we give it another go. Yeah, it does feel like we're going to come back for that overnight high. So I really trust this support down here around the overnight low. That should hold to come back and test it again. Sahil says, when you say, can they hold higher, meaning the price, the candle shouldn't close above? No, price shouldn't go. So it's all about where price goes. So when the market comes back down to test that overnight high, it can go a little bit below. It can poke down. That's okay. but then it needs to immediately come back up and it needs to be doing business above, right? The back and forth exchange needs to be above there. So as soon as they pull below and they start to do the exchange below, which is what we're doing right now, it tells us they weren't ready to keep going higher. So they need to pull back down. Now, I don't know how far they'll need to pull back down. Maybe they find support here, maybe here, maybe here, maybe here, maybe here. I don't know where they'll find support, but I know they're not ready to keep going higher yet. They need to put the market on discount and find those discount shoppers. And so you say, well, Charles, why does that happen? Why is it so common that we head to the overnight high or the overnight low, and then whatever happens next is what happens throughout the day? It's because of the overnight traders, right? There's a lot of people over the weekend who went long in here from 43.50 to 43.67. There was lots of traders buying. They kept buying and buying and buying and buying and buying and buying and buying. Now, they kept going all the way up to here, and they closed for the overnight, here at the highs. So that tells us that most of the participants in the overnight are net long. More of them are long, right? And we know they're all bullish, or they're all long from this area in here. Down here is where they started their buying, right? So when the R market opens and we push above their high, all these traders who bought in the overnight, their fingers are crossed, right? At this moment, they're like, what's going to happen? Is the US going to take the market higher today or not? That's the question that they're asking themselves. And if we, the US traders, right, if we start to step in and we start to buy above that overnight high, well, then these people don't need to take profits. They can stay in their trades. The market might go higher all day long. Why would they take profits now, right? So there's no profit taking that happens. Whereas if we do what we literally just did, you go above that overnight high and you pull back down in, well, now all these long participants from the overnight, from the weekend, they're starting to get a little nervous, right? They're starting to be like, ooh, shit. Is this trade going to work? Is the US going to take the market higher today or not? So slowly but surely, they're starting to get squeezed. And so we're waiting to find out as they pull back down into this support again, do US market traders step in at those levels? If they do, great, then the market keeps going higher. If not, then it gets very bearish below here because you squeeze all these people, plus you convince all these new traders from the regular trading hours to join the short. So that's why we get that, look above and fail or look above and go at overnight highs or lows. Am I just boring you guys out right now? Are you guys like, this dude is such a fucking nerd? Shut up, Charles, about your auction process. We get it. We get it, Charles. It's a competition. We get it. Jonathan, thank you. Speaking of keeping it going, let's keep going with those thumbs up. We got 136 people hanging out, only 48 likes. Let me know if you like with a thumbs up. Thank you, guys. I wasn't fishing for a compliment. I appreciate it. Any other questions from the chat? Anything you want to know? Got 9 minutes left in this stream. While we grind and grind on this overnight high. David V says, so to build on what you just said, this would mean that most traders will not take profits until the market goes to a level where they might just break even instead of securing profits. Well, it's a psychological thing. Everyone has a different system for how they take profits, but it's just a psychological thing. If you got long in here, okay, when the regular trading hours gets above the overnight high, you want that to be support because that tells you the market's going to keep going higher. Now, maybe you're using a trailing stop, or maybe you have, your take profit order at resistance above, or whatever, however you take profits. It's just the idea that if the market's going to keep going higher, you want to see new business. You want to see American traders, regular trading hours traders, getting in to keep it going, right? You started the momentum. You want to see them keep that momentum going. So the more it pulls back down, the more and more of those people are going to panic. Now, how will they get out of their trade once they start to panic? They may just let the market come back down and fill their stop order. Or they may choose to get out at market, just, hit the flat button and get flat up here, right? So that's the important thing is as long as there's support at the overnight high, they're still in. As soon as it fails, that support disappears. All these buyers start to disappear. So then the next auction, so the first auction was to get up there. The next auction is how far down does it go? Do we just squeeze a few overnight traders, bring in some regular traders and take another stab, which is what's happening now? Or do we have to pull all the way back down and test their support? If we have to pull back down and test their support, what happens, right? Do they hold or do they get squeezed? Do new sellers pile on to take it lower, or do we run out of steam right in support and turn around and come back up? That's what becomes important. Okay, but now we're back above the overnight high. We have the ticks. The ticks are holding. Okay, we bounced at the zero line and they're above again. So we're back to asking the same question we asked before. This is round 2. Ding, ding, ding. Can they hold that overnight high? Same game. If they hold it, we get bullish for continuation higher. If they fail, we assume more chop. And we just keep playing this game as long as we must until the buyers take control, either above the overnight high or back down in the support. Nope. Chop continues. Once again. I keep trying to break out to the upside and they keep pulling me back down. Okay, so now we're back inside the overnight range. We've shifted the ticks below the zero line. So we still have that iceberg above us. That is like a magnet that is pulling on price, wanting to come back up and test 43.90 once again. Okay, it's up there, that magnet. So if we push back through the opening price now, and then come back up and turn what is currently support into resistance, that would be bearish. So let's see what happens. We're not there yet, but we're getting close. Probably right as we print the B period. Yep. This is what happens when the market is in balance, guys. Sometimes it just goes nowhere on important levels. It just grinds and grinds before it decides. They moved that iceberg up. That's a little bit bullish. Hey, and the ticks are holding. All right. Well, just as I finished the stream, I got a call for you guys. I'm now bullish. I'm bullish as long as we can stay above the opening price to head up and test first 43.96, then 44.05. And then if there's no resistance at either of those levels, then I would look to test the weak references above. But we got to stay above the opening price. If we pass back through the opening price now, it'll be more chop, more sideways inside that overnight range. But for now, it's bullish. The buyers are trying to take control. And the question is, can they hold it? Can they keep holding support at 43.84? And like I said, the call disappears if we pass back through the opening price. Then I'm just wrong. But for now, I think we're trying to head higher. With that, I will say goodbye to the good people of Bookmap and hello to the pirates in the chat. If you are in the brigade, if you have been willing to risk less than a single point of profit on the ES, less than a single tick of profit on the ES, if you're willing to pay that to hear my insights every morning, then head on over to the private stream. And the rest of you, we'll see you next Monday. Have a great one, everyone. Bye-bye. If you're not in the brigade, head on over and watch Bruce's stream, also on the Bookmap channel. Okay, bye. Thank you very much.